You are wasting your time looking at 1,000 different stocks. The market is not a collection of individual names. It is a battleground of warring armies, and these armies are called groups. Your entire success as a speculator depends on this one truth. A stock never moves alone. It moves with its brethren. To bet on a stock without first understanding the condition of its group is like sending a single soldier into a battle without knowing if his army is advancing or in full retreat. The outcome is not a matter of chance, it is a matter of certainty. You will be overrun. The individual speculator who insists on studying a solitary stock, ignoring its sector, is betting on his own opinion against the collective judgment of the most powerful financial minds in the world. He is doomed before he even places his order. The game is not, and has never been, about picking stocks. It is about identifying the dominant trend and the dominant group that is leading that trend. This brings us to the first law, the foundation upon which all fortunes are built. Money moves in groups. You must burn this into your mind. Do not look at U.S. Steel in a vacuum. Look at the steel group. Do not trade a single copper stock without first diagnosing the health of all copper stocks. I learned early on that the money was not in the random wiggle of a particular issue, but in the great sweeping tide that lifted an entire industry. When the time is right, a bull market will emerge, but it does not lift all boats equally. It begins with a select few groups. Money, big money, flows into a sector, and one by one, the stocks in that group begin to awaken. First the leader, then its closest competitors, and finally even the laggards show signs of life. This is not a coincidence. It is the footprint of intelligent capital at work. Your job is not to guess which group will be next. Your job is to patiently watch the market until a group begins to announce itself through its price and volume action. When you see a powerful group begin to move, you have found the line of least resistance. The wind is at your back. It is infinitely easier to swim with a powerful current than against it, yet the average man spends his life fighting the tape, buying stocks in weak groups simply because they look cheap, wondering why he never makes any progress. He fails to understand that the stock is merely a passenger. The group is the engine. Once you have accepted this, you arrive at the second law, which is where true profits are made. You must trade the leader. Within the strongest army, you must bet on the commanding general, not the foot soldier. Within the strongest group, you must buy the strongest stock. This is the one concept that the public can never seem to grasp. They are drawn to the low-priced, inactive stocks in a moving group, the ones that haven't moved yet. They call them bargains. They think they have more room to run. This is fatal logic. The laggard is weak for a reason. It is the stock that intelligent money has ignored. The leading stock, the one making new highs, the one that seems too expensive, is the one that powerful hands are accumulating. It is strong for a reason. Its leadership is a declaration of its superiority. I recall a time when the market was beginning a broad advance. I studied all the groups and saw that the copper stocks were acting better than any other. They were the first to show real strength. Within that group, Anaconda was the undisputed king. It was moving with more force and determination than any of its competitors. While other traders were trying to find a cheaper copper stock that hadn't moved yet, I concentrated my buying on Anaconda. The stock that leads the group is the stock that will give you the greatest profit. Trying to pick a laggard in the hopes that it will catch up is a fool's errand. You are betting on a second-rate horse because the odds seem more attractive. You will be left at the starting gate while the champion runs the race. Your guide must always be the tape. The tape will tell you which group is strongest, and it will tell you which stock is the leader of that group. There is no room for personal preference or opinion. The verdict of the market is final. Buy the leader. Jesse Livermore consistently stressed that Wall Street extracts a heavy cost of instruction for every lesson learned the hard way. Fortunately, the core principles he developed to survive these expensive market penalties were captured for posterity by Edwin Lefebvre in the 1923 masterpiece, Reminiscences of a Stock Operator. It stands as the finest possible literary training ground, allowing you to absorb decades of painful operational experience without ever having to risk a dollar of your own capital. To ensure this timeless wisdom translates accurately to the modern computerized arena, we advise seeking out the Max Davidson Annotated edition. Davidson's careful commentary is indispensable for bridging the gap between Livermore's era and ours. A link to this essential edition is provided in the description below. These lessons are not theories. They were paid for with millions of dollars in losses time and again until the principles were beaten into me. You can learn them from a book, or you can let the market charge you its exorbitant tuition. The choice is yours. The third law is a direct consequence of the second, a warning sign that must be obeyed without question. Avoid the laggard at all costs. The laggard is a trap for the hopeful and the greedy. It is the stock in a strong group that sits there doing nothing while its peers are advancing. The amateur looks at the rising leader and feels he has missed the move. He sees the laggard, priced far lower, and thinks he has found a clever backdoor entry into the group's success. He is mistaken. The laggard is a sick company. It is poorly managed. It is laden with debt. It has some fundamental flaw that the big operators, the insiders, are aware of. They are selling into any small rally the public gives them, happy to unload their shares onto the unsuspecting. Remember the line of least resistance. For the leading stock, the path of least resistance is up. There are no sellers above it, only clear air. For the laggard, the path is cluttered with resistance. There are countless trapped buyers from previous declines who are desperate to sell at the first chance to get their money back. Every point it tries to rally, it is met with a wave of selling. You are entering a battle not with the wind at your back, but with a gale force wind in your face. Why would any sane speculator choose these conditions? It is because he is substituting hope for observation. He hopes the laggard will catch up. I do not deal in hope. I deal in facts, and the facts are on the tape. The tape tells me the laggard is weak, and I listen. If a stock refuses to follow its group leaders, there is something wrong with it. Do not try to solve the mystery. Do not be a hero, simply avoid it. Your capital is too precious to be wasted on the sick and the weak. This leads to the fourth law, the one that protects your profits. You must watch for the group to turn. No trend lasts forever. Just as you must be alert to a group beginning its advance, you must be even more alert to the signs of its conclusion. The money that flowed into the sector will eventually begin to flow out. This rotation is the heartbeat of the market. The signs of distribution are clear to anyone who is willing to see them, but they are invisible to the man who has fallen in love with his position. First, the leader, the very stock that confirmed the group's strength, will begin to falter. It will make a new high, perhaps on a burst of good news, but it will quickly fall back on heavy volume. This is called churning. The price makes no progress, yet the volume is enormous. This is the unmistakable sign of large operators feeding their stock to the clamoring public. While the amateur is excitedly reading the good news in the papers, the professional is quietly selling to him. Then you will notice that the laggards in the group, the very stocks you were wise enough to avoid, might suddenly have a quick, sharp rally. This is often the final stage. The public, seeing the move is nearly over, desperately buys the cheap stocks in a last gasp of speculative fever. When the worst stocks in a group start to lead, the end is near. At this point, your job is not to squeeze out the last eighth of a point. Your job is to sell your position and move to the sidelines in cash. You must observe this change in character and act decisively. The man who waits for his stock to tell him the move is over will always sell too late. You must sell when the group's leadership begins to break down. That is your only reliable signal. Finally, we have the fifth law, the rule that ensures your long-term survival. Do not marry a sector. Your loyalty is to your capital, not to a ticker symbol. I have seen men make fortunes in railroad stocks, only to lose it all because they considered themselves railroad men. They could not bring themselves to believe that the era of railroads could end. They held on, averaging down. As the market moved on to automobiles and new industries, they went broke with their convictions. A speculator cannot afford the luxury of an opinion. The market is a flowing river of capital. The money is always moving, seeking the highest return, the easiest path. One year it may be in technology. The next it may be in commodities. The year after it may be in financials. It is not your job to predict this. It is your job to recognize it as it is happening and to move with it. You must be mentally flexible enough to abandon a sector that has turned cold, no matter how much money it has made for you in the past. Your work is never done. You must constantly study the groups, searching for the first signs of accumulation in a new emerging leader. When you sell a position in a topping group, you do not immediately look for a short. You go to cash and you begin the process anew. You watch. You wait. You study the character of the market's action until a new group thrusts itself forward. You must be utterly agnostic, without bias or emotional attachment. You are a mercenary following the trail of big money. Where it goes, you go. When it leaves, you leave. This is the essence of speculation. It is not about being right about a company. It is about being on the right side of the dominant market force. That force is the collective action of groups, driven by the flow of immense capital. Align yourself with it and you will prosper. Fight it and you will be erased. Fight.